What's going on, flight crew? It's your number one pilot at Flystewie, and you are listening to the Uneducated Investor Podcast. Now, one of the reasons why a lot of people don't start investing is because it's intimidating. Some people think they're not smart enough. They didn't learn about enough finance in school. They think they need a major. And to some degree, you're right. It does take a level of intelligence, but it's really not as much as you think. Matter of fact, investing all in all is relatively simple. And as a test case, as a case study, I always typically look at Warren Buffett's overall philosophy. If you didn't know Warren Buffett, he's like always in the top 5 richest people of all time on Forbes list. He's famous for his stock investments. He owns shares in like Coca-Cola. So he's been doing pretty well for himself as a multi-billionaire. I think his net worth's around 70 billion right now. And his overall philosophy when it comes to investing is really very interesting. You see, back in his day, right now he's like, I believe in his 70s, but when he really started getting into it in his 20s and 30s, his approach to investing made a lot of sense. All he did was very simple. He saw great companies, he bought them, and he held them for a very, very long time. All of his companies are great, strong American companies, always in the top stock performing type of companies. And his overall philosophy when it comes to investing is just the American economy would pretty much have to collapse for him to lose money in the long term. You see, his bet wasn't necessarily on these companies per se, but it was morely on just America. And he knew that America was going to be one of the top performing countries in the long term. And all of Americans' companies are so well diversified, multinational, that he didn't really need to look at any other companies outside the country. So how does the average investor use the similar approach as Warren Buffett? Very simple. One of the biggest mistakes that a lot of investors make is they invest in a company in the stock market, they buy it, and then they see the stock starting to crash, so they really start panicking, and then they pull their money out. But take the Warren Buffett approach next time. Next time you're having that feeling that you want to maybe, invest in a company, ask yourself, do I see myself holding this company for the next 10, 20 years? Does this company look like it's going to be out of business in the next 10, 20 years? Does it look like it's going to be a juggernaut? Does it look like it will be profitable? Can I see myself using their products or their services? How important to the economy is this company? How does it generate its money? What are the threats? You see, when you look at the big companies like, GE, even though it's in turmoil right now a little bit, the Facebooks, now the Amazons, all these tech companies coming up, all these Googles, the products and services that you use actually every day. There's one thing that when you start to look at all these different companies, one thing they have in common. For America to strive, these companies got to strive. And if America falls and all your stocks lose, a lot of value, then you have a lot more bigger problems to worry about than maybe like a 50% drawdown in your portfolio. It's very interesting. A lot of people, they think, they're really scared. They don't want to be outbeat. They don't want to be hit by another recession. But the great thing about it is, if you look at the recession in 2008, if you held your investments and you didn't sell any, and you kept holding them for now, yeah, you'd make around 7%. Typically, there's a big recession around every 8 to 10 years. And right now, it looks like our economy is due for one, but these things are typically always hard to time, and yes, you should be fearful right now and not invest a lot of your portfolio if you haven't already invested, but always remember, if you diversify, if you bet on America and bet on the good companies, you don't take speculative risk and just bet on great companies that will be here in the next 20 years. Trust me, it doesn't take a genius to tell you that you're going to do just fine. And as always, guys, the most successful investors are the uneducated ones. Why? Because the uneducated investor always keeps learning. You see, I called this podcast "The Uneducated Investor" because just the approach I want to take with it. I didn't want to come do a lot of research. I didn't want to come act like an academic. I just wanted to talk like a normal guy who's somewhat smart, you know, somewhat average, and show you that if I can invest, so can you guys. You know, if I can go out there and do my little Google research and make these returns on these companies, so can anyone. I just wanted to make investing a more approachable subject. And hopefully, through me talking about these topics, slowly you'll learn that you can make these type of returns as well. Thank you, flight crew. And of course, it is time to take off.